wondering what you got for me. Egyptian cotton is up to be my lady only. I'm wondering what you got for me. Egyptian cotton is up to be my lady only.
What's up, Infobon? It's Freddy. A big heartfelt Dziękuję bardzo to our tens of viewers that have kept us in the top 10 YouTube sports card investing shows. Hosted by a Polish-American girl dad. On November 4th, Fanatics Trading Cards co-founder and creative vision officer Josh Luber offered his thoughts on the past, present, and future of the sports card industry with his entertaining and exhaustive 53-page white paper, Trading Cards Are Cool Again. I've included the link in the description below. If you haven't had a chance to read it yet, you really should. When the man helping steer the brand spanking new company set up to exclusively run in the baseball, basketball, and football card markets for the next 2 decades offers a window into his brain space, you should take a peek inside. Shall we discuss sports card insights, tidbits, and investing tips gleaned from Josh's musings? Yes, we shall. There was a lot to comb through. But here are my top takeaways. Rare, high-end cards can reach loftier heights, but they can also experience the greatest volatility since there are a finite number of deep-pocketed collectors and investors willing to drop, say, $738,000 on a Gem Mint Michael Jordan rookie. Golden Auctions received 40 more Gem Jordans in March after these 2 all-time high sales posted in February. That's right, 13% of the entire PSA pop immediately ended up on Golden's doorstep to auction the next month, which caused the all-time price to plummet by more than 50% in less than 4 months. I like to think goats are safe investments, but even Gem Mint goats come with big-time risk depending on when you buy and sell them. Buy low, sell high, simple concept, hard to execute. If only we had a crystal ball.
I sold chewing gum in 6th grade, blow pops in 9th grade, and collected baseball cards through high school. But cards are long dead.
There's a lot of smart businessmen and women putting big time money into the sports card space, like hedge fund billionaire and New York Mets owner Steve Cohen, Mark Cuban, Nat Turner, former Twitter CEO Dick Costolo, private equity giant Silver Lake, insight and talent agency Endeavor. Smart rich people have a mostly successful track record of staying smart and rich. Finding the right balance between supply and demand will be key to the long-term health of the hobby and the only way these investors make their money back and then some on an initial $10.4 billion valuation. Given his experience as co-founder and ex-CEO of secondary sneaker marketplace StockX, there is no one who better understands the equal importance of retail and resale markets working together to fuel growth in the hobby.
The resale market we know is $1.2 billion. Nike, including Jordan brand, accounts for 96% of all shoes sold on the secondary market. Just complete domination. Sneakerheads love Jordans. And profit on the secondary market is about 1/3. That means that sneakerheads made $380 million selling Nikes last year. Let's jump to retail for a second. Skechers earlier this year became the number 2 footwear brand in the country, surpassing Adidas. This was a big deal. And in the 12 months ending June, Skechers' net income was $209 million. That means that Nike's customers make almost twice as much profit as their closest competitor. If Nike wanted to kill the resale market, they could do so tomorrow. All they have to do is release more shoes. But we certainly don't want them to, nor is it in their best interest. That's because, unlike Apple, who will sell an iPhone to anyone who wants one, Nike doesn't make their money by just selling $200 sneakers. They sell millions of shoes to millions of people for $60. And sneakerheads are the ones that drive the marketing and the hype and the PR and the brand cachet and enable Nike to sell millions of $60 sneakers.
He understands cards have to retain value on the secondary market to thrive and continue growth and interest in the hobby. Overproduction will kill that value. Success is limiting supply just below demand, so there is a continued thirst for new product.
Oh! That's a talented man That's what I'm talking. Build it up again!
It's easier said than done, but at least one guy with a seat at the table understands and cares about the importance of the secondary market's relationship to the primary markets. Unfortunately, Panini and Topps have steadily increased printing in the last decade, exponentially since 2018. Not to junk wax era levels yet, but there is a concerning rise that should give us pause nonetheless. Prism basketball has gone from 3 parallels in 2012 to 44 in 2020. Select basketball has gone from 4 parallels in 2012 to 45 in 2020, while also introducing a retail version in 2020. And Panini football has gone from 17 sets in 2012 to 47 in 2020. And Anthony Edwards has 30 one-of-one rookies in select basketball alone.
Please calm down.
How many?
Josh understands that this isn't a sustainable model for healthy long-term retail and resale markets. The elephant in the room is that Fanatics trading cards can't do anything about Topps and Panini's overprinting until they get the MLB PA license in 23, the MLB license in 25, the NBA licenses in 26, and the NFL licenses in 27. That's a lot of time for Panini and Topps to run their printers like a tweaked up counterfeiter and grab as much short-term cash as they can before they're cut off. Why do they care about the long-term health of an industry they just got booted from? Which leads to the big question: how am I protecting my ultra-modern investments in these turbulent times so that I don't end up with a bunch of 2.5 by 3.5 kindling? For investment purposes, I'm not buying any wax or base cards between 2020 and Fanatics taking over the big 3 licenses.
What?
I don't trust Topps or Panini to regulate themselves. I hope they prove me wrong.
You serious?
Yes, print runs have steadily increased since 2018, but they absolutely exploded in 2020 and continue unabated today. The strong 18 rookie classes in all 3 sports, and the Fernando Tatis and Vladdy Jr. halo effect on 2019 baseball gives me comfort that these will continue to experience solid demand in the future, especially when PSA and BGS reopen and unclog the buy-grade flip lifeblood of the hobby, even if prices never reach the historic growth rates of the past few years again. If you've read it, what do you think about Josh's paper?
It doesn't matter what you think!
As always, I'm Freddy, and you're welcome.